Trying to trade without backtesting is like trying to drive on the M25 having never set foot in a car. Welcome back to the mini-series episode 6, where it's going to be all about data collection, and I'm going to give you a simple process on how to collect data, which is going to improve your knowledge and understanding of how the market moves. Let's go. Welcome back, traders, to the mini-series. In this episode, I'm going to give you a brief insight onto why we backtest, how we backtest, and it's important. So backtesting should be the absolute start of your trading journey. Before you execute live, you need to have some data. Now, this data is extremely important. Why do we backtest? Ultimately, you need to know that the system that you've been given or paid for actually works. So the first thing you're going to get from backtesting is you're going to see your expectancy, your profit expectancy, and you're going to see the strategy that you've been given actually makes positive percentage over a large data sample. Okay, now if you're jumping into trading and you've never got any data, how do you know, outside of all the emotions and all the psychology issues that trading brings, how do you know if the strategy even makes money over time? This is not financial advice, but even so, without data collection, without backtesting, you simply are literally taking the biggest risk ever. Okay, so that's the first thing. And secondly, you are starting to see what market conditions your strategy actually works best on. Okay, so you are going to collect a playbook of trades where the market conditions look and appear optimal, and then you're going to save these trade ideas into your personal journal, and you're going to build yourself a trade book. This should be the start of your trading journey, and it's so exciting because you are putting all of the knowledge that you've been taught so far into practice. And yeah, so what we do, this is TradingView. Now we're going to assume that you don't pay for TradingView at this time, so you can go back typically 3 months. So what we do is we mark our ranges and find our directional bias. As you can see here, we have break 1. I'm going to go, this is our previous range, break 1 on this candle closure. And then we're going to pull this up to the top, break 2, pull this all the way across. And this is our current dealing range on this section of price. I'm using the same one. Going to pull this across, and we're going to go with our final range. In fact, there's 2 more ranges in here. Not desirable price though, as you can see. And then we're going to draw our last range on. Now, if you can't map your ranges, go back through the mini series. Everything up to this video, I give you a clear roadmap. So if there's anything you're short of, go back through the YouTube mini series, and then yeah, put some work in, ask some questions in the comments. If I can help, I can help. So once we have our ranges marked, what we're going to do is we're going to jump down. In fact, before we jump down, we're going to mark any liquidity sweeps or any areas of liquidity that we can see. All right, any sweeps we can see in this. Sideways liquidity here. And we're going to have this marked up, nice and simple. This is just a quick process, you see. Now, I do actually use a program called FX Replay, right? And this collects all of your data for you, gives you your analytics, and you can skip price through. You can't cheat, you can't see what's already happened in advance. This is why we're not going to do bar replay, because it just gives false recording. When you have an insight of what's already happened, bar replay, subconsciously, you know, you will probably going to go with what you've already seen. Okay, whereas FX Replay, you select the date, it takes you back there to that period of price, and you simply execute your strategy on previous conditions without any way of cheating, and you get a real good feel, really good exposure, and you get all of your data collection back. Okay, you get all your data, all your analytics, and it's perfect. So what we do here, we are obviously bullish. We've marked our ranges, we've marked our liquidity sweeps that we can see, And basically, we have some sideways liquidity here on the 4 hour. How do I know this? It's the closure of the pin, like a pin candle on the H4. We'll have this one as well. So you could go back 3 months, okay, on TradingView for free. So you're going to mark your ranges on a data sample. You're first going to determine the direction. So as you can see, at this point, we was bearish. At this point here, we had break one. And you could do this. You simply cannot do enough. Don't be afraid of the work that it takes to annotate, okay? Like, trading like these annotations are like it's like a work of art. And then as you can see here, we have break two. I like how I've just completely cut myself up then. But yeah, break two. Now, once you have your 4 hour mapped, we always start on the high time frame, right? You know how to map your ranges. You've seen liquidity. This is everything that has been provided so far in the mini series. Once we have this, we're going to drop down to the 15 minutes. Now, zoom out with your mouse, go back to your first range. Break one, break two is at this point here. What I'll do is I'll map this. Okay, so we know. And at this point, we have our time frames are in line. This is your next task. If you don't know how to do your time frames, drop back through the course and through the mini series and simply follow it through on how to do your time frame alignment. Okay, so here we have our current dealing ranges. Okay, we are only bullish able to buy after this section of price. So all we're going to do, as we can see that the price is ranging, we're just going to stick to what we can see inside of session. Okay, so we have a 4 hour sweep here. All right, we mark this on the high time frame. We have a 15-minute engineered sweep. We are bullish overall. Technically, we would be out of line at this section. However, we've took 4 hour liquidity. Inside of your trading session in New York, we have a confirmation candle. This would be classed as an extended sweep. So this is our first trade idea with the new rules that we have just picked up during this mini series. What would we target? We'll target the range external. Where would we put our break even? Well, typically we go 2 to 1 or the nearest structure. So as you can see, how we do this is we'll pull this buy tool off, right? There's that high there to the left. That's 1 to 1.96. That's perfect. So we would have that as our break even area. When as you can see, break even got hit within session really early. So at this point here, we have had no risk left on the table for this trade. That's our first trade idea, okay? Then we're just going to go back through our sessions. This is Asia session, nothing of interest. Then we're going to go through our London session. We had a 4 hour sweep here. This is very, very interesting, okay? A 4 hour sweep here. Let me just undo that. 4 hour sweep, again, we know this. We have all our areas marked on. Time frames was still in line at this point. We went straight up, straight back down. One external run. We come into London session. What do we see? We have an engineered low. This is one range. Engineered low within session. A run on liquidity. And we have a confirmation candle just outside the session. Whether you have this in your trade plan or not, no stop loss coverage, nothing to the left to cover, so we could go to the bottom of the candle, round up to 50. And again, what can we target? The 4 hour external range high. Now, where would our break even be? Now, we can have a 2 to 1. So we'll drag this back. A 2 to 1. So at this point here, we'd have a break even set. And then we would take our risk off. Sorry about that. As you can see, consistent with my draw tools. So as you can see, our break even got hit really early on, and we don't know the outcome of this trade yet. Then we're going to continue with our last bullish range, which is, I do apologize. Oh, we still can find this large range here, so we're still bullish at this point. We're going to go again. We're going to track up. What do we see? A 4 hour sweep again, inside session. We have a large confirmation candle here. So after the sweep occurs, we have a large confirmation candle here. We would go long at this area. We would cover the low. Now this is interesting. This is a large trade idea. As you can see, right, the stop loss is huge. This is something that I'm going to show you, right? You may be thinking, like, why do we have sessions? This sweep happened before session, okay? This confirmation candle of the 4 hour. We swept the 4 hour, confirmation candle before session. What happened then? The session swept this, the volatility that came in the market early on swept this candle. So you can have this candle here, the sweeping candle, as your confirmation candle, okay? And you go to the bottom of the candle, you have a 87 point stop loss. You round this up to 95 to give it some breathing room, okay? All right, as you can see, this may even be a loss. We're going 95, somewhere near. Where can we target? We could target the previous range high, okay? In these conditions that we're in, we are ranging at this point. Swinging for the moon doesn't make too much sense. So this is where we're at. We'll target the range high, okay? Break even, 2 to 1, okay? Or the range high. This would be somewhere near 2 to 1. How you would do that is you would select your 2 to 1 in advance. You would see where it is, 1.6, okay? We're going to go that. You can see break even got hit. We're not looking for continuations at this point. That's further down the line. Okay, we carry on. What do we happen here? We have lots of buying momentum at this point. We've swept the high, came back into the range. This is a riskier position, but again, it's valid. Typically, we don't trade too close to a range external when we've took high time frame liquidity, because more often than not, we anticipate a pullback. But in this instance, if you look at the volume, the share volume as we ran the range, it blasted straight through our range external. So in this instance, you could be more aggressive. So we've had a engineered low inside session on the M15. We've had a confirmation candle. And at this point, we don't have any target, okay? So that would be the trade. What would we do? We'd target a 2 to 1. Now, I actually took this trade idea on Thursday. The members of my community can confirm this. I took this trade idea. One trade, one win, 1 month done. And I targeted a 2 to 1, okay? Then what do we have? Let's continue. We have a London session the following day. What do we have here? Engineered low, the same thing over and over again. We're still bullish, we're still riding the momentum. We have a confirmation candle just before. This would be more likely a 5-minute refinement, which we're going to cover later on. Even so, this entry didn't provide because it was too far into our session. The confirmation candle would have been this large one here. This high up the range simply does not make sense, okay? So didn't take that trade, wasn't interested. Now, let's move on. What do we have in our next session? We have a 4-hour liquidity sweep inside of session. We have a confirmation candle here. As you can see, no stop loss coverage at this point. We go to 30 or 40 points minimum. 40 points. You could target the range external. Same process every single time. Where is the break even? So before we even map the break even, we'll pull this up before we have an idea. 2 to 1 or high. I would go with this high here. 5-minute structure. It's not really 15-minute structure. But if we are to continue lower, this area here is the most likely at this point. I'll drop down to the 15-minute just to show you. Put our break even on first. The 5-minute, sorry, I didn't know I said 15-minute. See, it's a visible swing high on the 5-minute, but not clear on the M15. Multi-time frame analysis. You'll get so far into this. You'll see a group of 4-hour candles, and you know exactly what's happening on the lower time frame. This is what this mini series is going to get you somewhere near. And then we have a break even here. But as you can see, this one was a loss before. We took the 4-hour risk entry. One of our entry models. Then what do we get in session? We get engineered low. We get a sweep of that low, 15-minute engineered low, we get a sweep, and we get a confirmation candle, which is extremely large. No stop loss coverage required, okay? 94, 100 points. Do we get enough target to the range external? A 2 to 1 is our minimum. Yes, we do. This trade is still running. If you took this on your personal account, you'd still be in this. If you took this on a funded account, you would currently be asked to close at the end of play. So you'd have took a profit on this, and you'd have profited just at 1% before market closure. Okay. So what I'll do is I'll leave that on there. So we have just gone through our entry model. Okay. We've just gone through it. We've traded on these unpredictable price action, but all we have done is stick to the headwise market structure that I've given you. So even in these range bound price action, right, you can still extract profit. What can you do? Well, you can either trade premium and discount, avoid the equilibrium, the middle of the range. We'll touch upon that next. And you could just target the liquidity areas that are visible on the higher time frame. That is the secret to this. So once you've gone through and you've honestly marked out your losses, your valid trades, all you're going to do is collect some data. So first trade, take profit. You can do a call out. Okay. 4.9%. Second trade, as you can see, we hit a break even and it didn't quite reach our target and it took us out here for a break even. So we're just going to completely ignore this one. We're going to pull the profit and the break even off. Or we'll just leave it there and say break even, because I'm trying to make this as simple as I can for you. Break even, so nothing's changed. Then let's continue here. We have an entry candle inside session. We targeted the H4 high. We have a break even hit. We had another positive trade idea. What is this win? 2.2%. What do we have here? Another trade idea. We didn't target the range high because at this point there was no range high. So we're just targeting past our current range, printing higher highs. But the problem is we don't know how far. So if we had a visible target, it would be easier to go to that target. But because we are at a current high with no target to aim for, our profit targets should always be limited. I will target a 2 to 1 minimum. So in this instance, we have the 2 to 1. So we have 2%. Continue here. We had a loss in this section. Let me move this across. We had a -1 here. 4-hour risk entry. -1. And then we have a 1% here closed at market play. So all we're going to do is add all of these together. I'm going to round it up quickly. So let's say 5%, 7%, 9%, -1, +1, 9% traded even through this difficult times. So all you're going to do is you're going to do a call out. You're going to do 1, 2, 3, 4, 5, 6 trades. 6 trades. You're going to do 1, 2, 3, 4 wins. You're going to count your losses. 1 loss. 1 break even. And then we're going to tally this up and we have a +9%. And this is how you backtest, right? This is a simple way of doing it. You are being honest. You are noting the losses. You are noting the wins. You are sticking to your rules that I have provided mechanically, straight to the point, and you are recording your data. You can do 3 months of this on any assets that I've suggested in the previous videos. And this is the start of your data collection. Let me know if this video has been of value. I will see you on the mini-series episode 7. Thank you, traders. If you have found any value in this video, please subscribe, like, and share it with another aspiring trader, and maybe we can help them on their journey.